Cool. Okay, guys, so welcome to this session where the GIBS Alumni Business Club is hosting the MIC Mine Workers Investment Corporation company, sorry. My name is Betha Khokong and I will be your host for this evening, okay? So I'd just like to start with a bit of formalities with respect to how we're gonna conduct the event. I'd just like to ask everybody, if you're not talking, to just please keep your mics on mute, because we're expecting quite a number of people, and we'll allow you a chance to ask questions at the end, and just please unmute yourself if you're talking, but otherwise just keep yourself muted the entire event, all right? Then in case of emergencies, please proceed to your nearest exit, find it wherever you are, and that's just for jokes. But in case of load shedding, we are expecting a number of people to experience load shedding, especially the person that's hosting the meeting at 8 o'clock. So we'll try as much as possible to be done by 8 o'clock. But if we are not, and there is a slight break in transmission at 8 when we are reconnecting the meeting, please don't panic. Just sort of like stay in the meeting, and if anything happens, load shedding on our side, just keep connected, and then we'll just reconvene the meeting if we're not finished by 8. But by all accounts, according to our timekeeping, we should be finished around 8 o'clock, but you never know. Some of these things tend to go ahead of, beyond the time that has been planned. So first of all, thank you everybody for making it. I know everyone is excited to hear what MIC has in store for us. So if I can just take some time to introduce the guys who are going to be talking to us here today. We have, first of all, our tech person from MIC, Oren Fuchs. Oren is the senior stakeholder manager at MIC, and I have to give him great thanks for making this event possible. And that goes to things that happen. I'd like to thank him. I'd like to thank him for making this event possible. And then I'd like to also introduce Nchaupe Khaole from MIC. He is the Chief Investment Officer, and he'll be talking to us together with Thato Ntseare a bit later on, and they'll be doing the presentation for us. Thato Ntseare is the Impact Investment Manager at Mine Worker Investment Company, all right? Then we also have two very special companies with us here today. We've got Khaole. Khaole is one of the companies that got the MIC funding last year, so they'll be here as well to talk to us on this event. And we've got also from Rentoza, Mishan Ratan, who will be representing Rentoza. Both these companies, Khaole and Rentoza, got the MIC investment last year, so it'll be very interesting to hear from both the MIC side and from the companies that got investment from MIC, okay? So without further ado, and I don't want to go ahead of time, take too much time, I'm going to give it over to Thato and Nchaupe to take us through their presentation. Their presentation will take about 15 minutes, and then after that, we'll then come back here and do a sort of like, a roundtable discussion where we will get everybody involved in this conversation so that it's a bit more engaging, all right? So with that, Thato and Nchaupe, you can take over.
Awesome. Yeah, I'll hand over to Thato. Thato will just take us through a deck that we prepared that speaks to who Khulisani Ventures is and what it is that we're trying to achieve through the initiative. I'll just chime in when it's Q&A time. Over to you, Thato.
Great, thanks Nchaupe, and thanks Bertha for the chance to to take everyone through Khulisani Ventures. I think just before I go into detail around who Khulisani Ventures Khulisani Ventures is, I'd like to take everyone just through the thinking of where and how the origins of how Khulisani Ventures came to be, and basically where it came to be is that. So basically where Khulisani Ventures comes from, just in terms of setting the scene, it was fundamentally, it came out of a few things that we identified as MIC. First of them being the fact that even though this is American, this particular slide speaks to American data, but we identified that there was a disparity, and there continues to be a disparity between the ability for Black founders and non-Black founders raise venture capital money. And just from looking at the graph on the right there, you can see that, so you can see from on the right there, you can see the disparity between the two categories and the two ethnicities, in that you find that a lot of non-Black founders are able to raise a lot of money, and exponentially at very different rates that Black founders are able to. Then when we take it a little bit closer to home, specifically when you see where the need is coming from, right? When you look a bit deeper into the data, you see that for the most part, and when you look at the spread of where the largest number of early stage businesses, or from in a South African context, SMEs are, you will see that for the most part, just from looking at this graph, that when it gets to businesses that are less than 10 million Rand, by far, that category of businesses are dominated by, the previously disadvantaged individuals or Black people, just in summary. So that category of business is dominated by Black individuals, whereas those businesses that generate more than 10 million Rand in revenue are actually dominated by non-Black people, by white individuals. So we saw this specifically as an opportunity for us, and that also piqued our interest in terms of, how can MIC allocate capital towards solving this thing, so that we can manage to get a better and far more representative mix when it comes to entities or SMEs being a size that is larger than 10 million Rand. So we honed in really on this, and we sought to unpack that issue, and we said to ourselves, this is a space that we think from an impact perspective, and hence I'm the impact investment manager. But from an impact perspective, we saw this as a clear opportunity for us to be able to deliver impact. But we didn't actually stop there. We actually, as I said, we sought to unpack the issue even further. Now, on this slide, when we delved even deeper into the issue, we saw that actually, if you go even deeper, you can see that there's furthermore a mismatch when it comes to even female-led startups. And I think when you look at the graphic on the right, you can see how stark the difference is in terms of female-led startups being able to raise money across the continent. I mean, if you look at it, you see organizations where there's a female CEO, only 13% of the capital raised in 2021 by startups with that sort of classification were able to raise money, whereas where the CEO was not a female, 87% of the capital raised during the year last year went to those types of businesses. And even more so, when you look at female founded versus non-female founded, you can see the mix there. Only when it comes to female founded startups across the continent, 6% of the total deal flow that was invested over the year last year, only 6% of that went to businesses that were founded by an only female team, whereas 76% of the funding went to businesses where it was an only male team, and 18% is where there was a mix. So you can see that from there, I mean, there's a very big need required. And if we go on to the next slide, you can see as well that this is generally a trend even across sectors. It tells the same story when you look at the bottom half of the graphics below, that it tells the same story when you look at the graphs above as well. You can see that this has been a consistent trend over time, even though when you look at it, there does seem to be some sort of improvement over time, but the differences are stark. It is important to highlight, though, that in some of the instances, they do indicate that overall, within this sector, you find that there's less participation from female entrepreneurs in general. However, it is very clear that there still represents a massive, massive, massive underrepresentation. So when we looked at these areas, we said, there's definitely a really big opportunity for us as MIC, as a Black-owned investment vehicle, to participate in this area and really see how we can not only generate return, but how we can deliver impact. you know. So looking at that alone, we said, okay, there's definitely something to be done here. But in order for us to understand how best we can deliver a workable solution, we actually went and did some ground research. We interviewed a number of startups, founders, and we sought to understand, okay, what it is exactly that individuals and founders are looking for when it comes to assistance to grow their business. And it was quite clearly summarized within these three categories. You've got an access to markets issue, an access to skills issue, and an access to capital issue. So the one on the right, we as an investment company, it was very clear to us that, you know, that is our sweet spot. We know exactly, we have the capital that we can bring to bear, and this is how we can assist as MIC. We know that that's our sweet point. But from the access to markets and access to skills side, we needed to unpack that a bit more. And from engagement, what we learned was that, you know, the ESE and the ESD programs and all of those initiatives that have currently been put in place really have been there to support Black SMEs and Black startups in South Africa. And a lot of them, a lot of Black entrepreneurs have actually found a lot of assistance within these programs. But the one area that they've indicated was that where they struggled was that the ability to sort of graduate out of those programs has always been a challenge. You know, they need those programs in order to give the businesses the lifeblood to keep continuing at a steady pace. But for those individuals and those startups who want to scale up and who want to grow and want to be, you know, one day listed on the JSE, the guys were saying that is one area that where they really felt that they need more players who can bring, you know, more solutions to bear, you know, from an access to markets, access to skills, and just generally within this category. So now we as MIC, we know what our strengths are, we know what we're good at, and, you know, we have the benefit that we have this capital that we can bring to the party. But we realize that, you know, if we're going to do anything or bring any solution forward, it has to be something that incorporates all three of these areas and the ability to assist any company that we invest in all three of these areas. And that's how Khulisani Ventures eventually came to be. And this is just a brief summary of who we are and what Khulisani Ventures eventually came to be and how we designed it. So as a complete vehicle, we've allocated 150 million rand. I mean, this was from last year already. We've allocated 150 million rand to invest in startups. We're looking to deploy this money into around between 5 to 8 startups, depending on how things go. And the ownership there is highlighted, but I think what's important to highlight is that we are looking for significant minority positions. And for the most part, that's because we would like to, when you consider the access to skills and the access to market side, is that once we invest, we want to bring our partners to the party who will assist the businesses to grow. So we want to be able to have, you know, significant skin in the game and capital that we've put forward so that we can align all of our objectives and align all of our goals. We're also applying a milestone-based investment approach. And essentially what that means in summation is that we would look at your business, we would look at the needs of the business, and we would back and forth that. We would understand that from your presentation and your pitch deck, what your use of funds is. We would interrogate that a little bit in detail. And we would break that into milestones. We would break that up into milestones, and then we would allocate the total investment amount to the business in accordance with those milestones. And as you achieve them, we deploy more money into the business. That will be something that would be agreed up front. The tranches would be agreed up front, and then we would do that. And we feel this is a good way for all of us to be aligned in terms of how we grow the business over time. We've also brought in technical assistance partners, and those are the few that are there that we've highlighted. So Grindstone Accelerator is one of the most prominent accelerators within this VC space within South Africa. So they're one of our key partners to assist. We've got I'm an Entrepreneur, who are also bringing services to bear that focus around mentorship and then we've also got Kadena Growth. We've also got Kadena Growth Partners, which is a consultant that we've got on our cards and on our books that will assist the business, particularly once you've achieved most of your milestones. They will come to the fore to assist with thinking around how to strategize scaling up the businesses, going into new markets, building out the SKUs, and building out your revenue streams. And that's really a group of guys who've got global acclaim, actually. A lot of them are in Singularity University and are linked to organizations such as those. And then, and I think the key thing that comes with Khulisani Ventures as well, from an impact perspective, is also the focus on us being sector agnostic. And with that being us being sector agnostic, the key area that we want to highlight and emphasize is innovation, right? We are looking for businesses that are innovative for the most part, and the history of that all comes down to the fact that during the times of COVID, we identified that a lot of the businesses that were still able to operate, a lot of the businesses that were still able to deliver and operate during that time were all centered around being technology enabled and had that really central to their businesses, and that core element around innovation, around how you had to think differently about how you get to your customer, because your customer was unable to move around, was not mobile, was based in their home. So we've centered and angled a lot of, in fact, the core element around this portfolio around innovative businesses. And we see innovation in those three ways. So it's your innovative product or service for a traditional market, an innovative way of delivering existing products in or services, which mean that you found a way to improve, to become more efficient or more affordable, as well as lastly, an innovative product that addresses a growing problem in the world today. And we've put some examples there on the right, but those are by no means exhaustive. Those are just to get you a sense of what we're looking for. But the key is any sector, logistics, whatever the case may be, as long as there's an angle to it that can be considered and looked at as an innovative way to deliver a solution, it is definitely a business that we would look at. In terms of the detailed criteria, the specific detailed criteria, this is what we're looking for: businesses that are post-revenue, majority Black-owned, scalable, innovative. Can't emphasize that one enough. And then we're looking to deploy, up to 30 million rand, but by no means that it doesn't mean that your business is required 20 million. We wouldn't look at it. It's just a range of what we're looking to deploy. And then our preference is for you to have, and look at teams, organizations that have strong teams, summarized in those 3 points: knowledgeable in their field, previous leadership experience, examples of proven success, either in a previous business or at their previous employer. Any of those would do. And then we've got a few specific exclusions there, such as a fast food franchise, seed stage investments, primary agriculture. I just want to emphasize around the fast food franchises, one, in that, if you've got a business of some kind, and one of the ways in which it can scale and grow is through a franchise model, it is a business that we would look at. I think just to highlight, when we say fast food franchises are excluded, it means, for example, if you are an individual who already has, for example, 3 McDonald's franchises, and you're looking for funding to get a 4th one or a 5th one, that's a business that we would not look at. A seed stage, and yeah, as I've noted, seed stage investments, basically that just to flesh that out a bit, it's essentially a business that is still at an idea phase, right? So if it's a business plan that you're putting together, you have a pitch deck, but it hasn't been tested, or you haven't generated any revenue from that idea, pre-revenue, that's how we look at seed stage. And then I think primary agriculture is self-explanatory. A key portfolio target for us is to have a significant proportion of the investments that we make to be female-led. And that is why specifically for this round, we're amplifying, that communication, and we're making sure, and we want to communicate and make sure that it's known that we want as many female applicants as possible, We managed to get quite a few last year. We got about 34% of our applicants were female last year. Yes, 34% of the registered applicants were female last year. But we want more. We want that pool to widen. We want that pool to be much larger. We do have a few exceptions to these criteria, but we have to have a very, very strong view as the investment team that your business is highly innovative and scalable and has a really high potential for entering global markets, and also a really strong ability to integrate with MIC's core portfolio. And then here are some examples of the concluded transactions that we've done to date. Zakeni, who was mentioned earlier, from Khaole. You've got Mishan from Rentoza, and then you've got Limulab, which is our first sort of majority, in fact, only 100% female-owned business. That and these are the first three businesses that we're really excited about and really excited about partnering with.
Okay.
And in the process, sorry, let me just quickly go through the process. I know I've taken quite a bit of time already, but the process, just just in summary to highlight, is the window opened on the 12th of July. So this Tuesday, it will open for about 6 weeks. Post that, we were going to look at getting to a top 20. That top 20 will communicate to, and we will request that they prepare pitch decks for us and prepare some other data points for us. Then we'll invite them to have 30-minute pitches, and then from that point, the investment panel at that point will select the top 10, and then that top 10 will go through a due diligence process, looking at your financials and your your administrative side, your governance, all those sort of things. In summary, we will look at those over about a 6 to 8 week period, and then after that, you as the entrepreneur will present sort of like in a Shark Tank or Dragon's Den fashion to our IC, and from then the IC will select based on the businesses that they believe we present attractive opportunities. They will select any number, could be out of that 10, and then from there we would proceed to look at potentially concluding a transaction. So just to end off, I would really highlight and try to push as many of you as possible that have businesses, have friends that have businesses, or know people who would meet this specific criteria, to go to our portal. It is live. You go there, you register, you fill out all the questions, and then from there, hopefully you'll be part of the top 20, top 10, and then we can take it from there.
Yes, thank you very much, Thato. Can you go back a bit to that slide with Khaole and Rentoza? I think 3 slides back. Oh, perfect. Yeah, that one. Okay, so I think with this, we're gonna go into the next part of our session here today, where we want to hear also from the entrepreneur's point of view, and we're very lucky to have Khaole and Rentoza join us here today. And I'll just start by just asking, Zakeni and Mishan, just give a quick, 2-minute introduction of yourself and your company specifically, so that you give us a bit of background about what your company does. And then after that, I will direct specific questions to, individual to you and Rentoza, and also back to MIC, just to kickstart our sort of panel discussion.
Great, thanks. Evening, guys. How you doing? Okay, I'll jump in here. So I'm Mishan Ratan. I am one of 4 co-founders of Rentoza. I fulfill the role of CMO currently in the business. My history is quite long. Sales and marketing for a long time. I worked in finance for a little while, in banking, left that, and then really focused on understanding consumer behavior, and worked across a multitude of FMCG businesses. Left that, started my own consultancy in branding and positioning. Post that, ended up in an agency where I served as a director at one of the ad agencies here in SA for a very long time. And during that time, started Rentoza with some friends. And basically what Rentosa is Africa or South Africa's first subscription platform for product, and specifically for electronics, appliances, and baby goods. And what we do is we offer people access at affordable rates and with flexible terms to all of these products. So you can come onto our platform and you can access sort of cell phones, laptops, fridges, microwaves, baby goods, strollers, car seats, all of those kind of things. And you can subscribe to it for a month or 18 months or 12 months or 3 months, just depending on what you need it for, right? So what we're really trying to do is we're trying to change the way people drive utility and interact with these, what we call essential products in their daily lives. And we're hoping to change the way people behave with these products so they can make better decisions with their money. And yeah, it's quite a big job, but it's an exciting journey, and go check it out.
Thank you. Thank you. Thank you. Zakheni?
Awesome. Thank you. Good evening, everyone. So my name is Zakheni, and I'm the founder of the Blanket Tech Group, which Khaole is a part of. So essentially, the Blanket Tech Group, we started this in 2014, and the idea was to really use innovation and technology to make education as well as digital education accessible. And so part of the the first big projects we did was to work with some of the best local teachers around KZN and other provinces to develop local languages that are in line with the curriculum. So we essentially completed the entire curriculum for maths and science in isiZulu, for instance. And then we developed the distribution platform, which is focused on allowing for digital content to be distributed in areas where there is no internet connectivity. And that whole project was essentially called the Siyafunda Digital Library, where we deploy this box to Nchaupe or in Ngandla, where there is literally no connectivity, and it's preloaded with content. It creates a Wi-Fi hotspot, and anyone within that environment, whether it's a school, a library, a community center, is able to access content without needing data or even a SIM card. So it was essentially about collecting data as well as distributing content. And from there, then that's when Khaole also emerged. And what we wanted to do there is that the issue we realized is that as much as we're distributing all this video material and content from the GBE and other partners, there was still a huge problem with books. People were either not able to afford books, or they were not able to access them because the physical libraries simply just didn't have the capacity to hold the books that people needed. But also even some of the bookshops didn't have the books. And so our idea was to say, how do we create Africa's first interactive digital bookstore and e-library? And essentially that's what Khaole is. It's one platform where you can go in and you can either buy a physical book, new, or buy a second-hand book, but you can also be able to go in and rent a book. And so what that means essentially is you buy a digital license for a limited period. So we've got 12 months to 24 months, because essentially when you look at the academic year, either students or kids in high school, you typically need a book for about a semester or a year. So it really doesn't make sense for you to pay full price for a product that you only need for that limited period. And so with Khaole, you have an option to basically buy a limited 12-month license of a book at about 35% of the retail price. And the idea there was to really make books accessible, but also saying, how do we help people transition from using physical books to using digital books, but at the same time, assist those who need physical books to be able to get them a lot more effectively. And we created this 5-in-1 all-inclusive platform. So essentially, Khaole has got its own internal e-reader, which allows you to highlight, dictate notes, record, freehand write, as well as being able to attach images, pictures, and links directly onto your book. And everything is stored on cloud. So you never lose your book, you never lose your notes. At the same time, it's got a wallet functionality, which allows for a parent, for instance, instead of giving their children money or access to their credit card to buy books, they load funds and they can transfer those funds to them. And this is a platform that we believe is going to make a huge difference in the bursary fund aspect, where book allowances can actually be allocated into the Khaole platform. And then the beneficiaries are able to just buy books directly from there. And they're not able to basically cash out those funds. Okay. The other aspect, sorry?
No, I was saying no, thank you, because we're gonna run out of time, but we're gonna get back to some of the points about Khaole when we're asking questions. But I think we thanks so much for that feedback. I'm going to start the discussion by rounding back to Thato and asking, Thato, from the MIC point of view, the companies that you selected, we've seen your high level requirements and so forth. But if we get into the specifics, what would you say what it was about specifically Khaole and specifically Rentosa? What was it about the specific companies that made you eventually look twice, or even, finally decide to make that investment in them? What were the specific, issue? Yeah, what were the points about those two companies?
Yeah, so I think probably the key area that's for both of them, and I'm sure most of you can hear from when you hear the business models. There's this growing trend around rights of use versus ownership, and I think both of these businesses are sort of playing square in that environment. If you think of the growth of like your Ubers, instead of owning a car, you can just easily just access it on your phone and use it, at the press of a button or swipe of your finger. So you could, and I'm sure from listening to Rentosa's business model and listening to Khaile's business model, you can see that there's a congruency there, in that both of them actually leverage off of that type of thinking in terms of where the world is going, in terms of the right of use side of things. We also noted that for both of them, that there was a big gap. There was a big gap that they were addressing from a Rentosa perspective. They are able to provide access to devices to individuals who maybe would not necessarily qualify for an installment credit agreement, but are still good payers. It's just a function of maybe that individual is not earning just the right amount, and we saw that there's a very strong access angle, for particularly from a Rentosa perspective, and the opportunity to plug in different products was really big there. So you can drive access to a multitude of products through the model that they've identified. Khaole is very similar around access to books. Sometimes there's the limited ability to print books. Paper is always a big concern, but digital books, you can access it immediately from anywhere. And speaking to his business model about driving access in rural areas and that sort of thing, we saw that not only from as a strong business model, but there's also a strong impact lens. There's also other elements within the core business where we identified that based on competitors, from a Khaole perspective, they were very strong, and there was a really strong opportunity to go ahead of the incumbents, and we felt there was a very strong opportunity there as well.
Okay, no, thanks for that. I think that's quite clear, looking from the outside as well. And my next question will be directed to Mishan, and I'm asking this now from an entrepreneur's perspective. You've gone through the entire program. You started applying, I think, around this time, same period last year. And what in your mind is your experience? Has your experience been like going through the MIC Ventures journey? Going through from the beginning, from the application, getting shortlisted. If you had to look back and give yourself advice, looking back a year later, what advice would you give? And obviously that would be useful for us and people that are looking to start that process to understand how the experience was for you specifically.
Thanks for the question. So I think the experience with MIC was quite different compared to, as a business that's growing and looking for funding, you're always, trying different avenues. And I think the structure of this program and the fact that it's an impact investment fund also makes a big difference. Going through this journey, it was very easy to see, what they're trying to achieve here. And I think that for us was also vital, being a Black-owned business, going through this process. It was very different from the other processes that we had been through. It was really good conversation. I think the process was efficient, was very open, and it was clear. And I think as we got through the different stages here, the communication was excellent from Thato around, this is what we think is great about your business. This is where we think things should be going. And that sort of line of communication helped us mold our story as we went along this journey, to the point where we ended up at the end presenting, of course, and you present to quite a few people in a live environment. And I think, if I had to say, anything in the last year about what I maybe would have changed or learned, I think it's just, if anybody's going through this process, make sure you understand your story, right? And evolve your story as you go. Listen to what they say, take the points, build a better narrative. And by the time you get to the end of it, you're going to tell a compelling story that meets the objectives of this fund. And that's going to put you in good stead going forward, not only for Khulisani Ventures if you get through the process, but I think that process also taught me and the team that, how to finesse and build your narrative in a very interesting way as you go along. And that story just gets better and better and more succinct as you go along. So just the journey itself was very informative about, what we actually do and how we're actually trying to solve problems, and making it very clear to sort of everyone we speak to now. And I think that was one of the biggest learnings that we had through this process.
All right. No, thanks a lot for that. I think that's very useful. And the next one I will direct to Zakheni. Also from an entrepreneur's point of view, as somebody that has also gone through the process from the beginning to the end, what advice would you give to people starting out? What should people focus on more? What should people focus on less? What, if you had to give someone tips in a way, hints or, good entrepreneur to entrepreneur advice around focus on this more, focus less on that more, so that, some of us would also be successful going through the process.
I would say just be authentic. I think that would be the main thing. I think you're dealing with people who understand exactly the impact that they're trying to do and the role that they want to play. So I think first doing that introspection to understand exactly what it is you're trying to achieve and getting your story straight, I think would be the first thing. And I think that will enable you to be able to build better relationships and better rapport with this group of people. But I think also just in general, when it comes to, I think, looking for a partner such as, an investor, I think always try to find someone whose values you align with, and as well as the direction, not only of the organization, but in terms of what they are trying to achieve and where they are going. Because for us, for instance, we looked at MIC and we saw not only the opportunity to partner and get funding, but we also saw the ecosystem that they were building, which enabled a lot of collaboration, which enabled a lot of leveraging and sort of expanding our network and access to markets. And so that was for us one of the key things. And I would say that with anyone looking for a partner or an investor, I think those are some of the main things that you really have to consider in terms of bringing in a partner such as this. And also just, being able to understand the impacts and understanding your products, and understanding that there's a lot of things that you may think you know, but that you don't know. And this whole process is going to be about learning and growing, and being open to that. And so that would be the main thing.
All right. No, thanks for that. And I'm going to circle back to MIC with Thato. And this was a question asked by one of our members actually before this session. So I must make sure I cover it. What are the mistakes that you've noticed a lot of companies doing when they're going through the application? Because obviously everybody, when they started, however number of the people that applied, everybody was hoping to be successful, but not everybody made it, not even to the top 20. What are those pitfalls that the SMEs fall into that you look at later and can recognize, these were the mistakes the companies made with the application process?
Okay. I'd say the first one sounds like it's a very simple one, but people just didn't finish the application. I just didn't understand. That was very confusing to me. But I think I need to highlight very, very important that when going through the application, just that it's very, very important that you make sure that you've completed all the elements of the application and submitted it. But from the business perspective, I would say the key thing, particularly when evaluating the businesses that and the applications, is that the individuals didn't unpack. I'd say the key thing that you need to unpack for us is the innovation around your business, particularly around the problem that you're solving. Sometimes it wasn't really articulated that well. You'd find individuals put one line, 2 lines, 1 line or 2 lines there. So that was a key thing. And also fleshing out what the opportunity is. And I think those two are really, really critical in terms of you completing the application. I think when I look through the comments, and Nchaupe noted to some of the questions there that, or one question around, so an individual's business was pre-revenue and they have an off-take agreement. I'd say the key thing for us is that, is your business innovative enough? Yes, we have the criteria there, but the key thing is putting it across that, our business is different. Our business is not like others. And I think that's what you've got to spend a lot of time really unpacking for us. Yeah.
All right. No, thanks. And I'm gonna give you another question. This is the last one, I promise, because we're gonna go into the Q&As. I think this is important, especially for the female founders. We hear it a lot. We're looking for Black-owned businesses. We're looking for Black female businesses. And I think you even highlighted it in one of your slides, that is specifically what your target is for this year. But then how does it end up that within all the companies that you invested in, okay, except with the exception of Limu Labs, within the top 10, whatever, it's just a few female founders. What do you think is lacking? Is it the industry? Is it the quality of the applications you're receiving, or are you not receiving enough from the females? What do you think is the challenge within the South African SME space with female founders? And also with all of that said and done, how do you think we can improve that later? If maybe there isn't enough female founders in the market, how do we try to improve and make build an environment where female founders can flourish, so that the next time you go for a round like this, you end up with 10 Black female founders?
Sure. So I'd say probably one of the key things behind why we ended up where we did was because I think it's just a function. There's a big part of it that's a function of timing. Just historically, this space has been one that's been dominated by males. And what we found is that, as I mentioned, there were 34% female applications, but most of them were quite early. Most of them, a big proportion of them were quite early, or a big proportion of them were related to some kind of professional service where you struggled to see the scale. So what we are thinking that and hoping for in this time around, that a number of those that were quite early before would have, really, really streamlined how their business model is, and really streamlined between then and now, and would have grown into that. I think, and that's what we were hoping for and we're looking for in this time around. So we've definitely got that hope going for us there in terms of this time around. From a support perspective, I mean, I think, there are a number of vehicles out there that have that pure focus around supporting Black females and particularly in a startup environment. I think there's quite a few out there, and the network as well. I think in terms of speaking, or let me just take a step back. Speaking to my earlier points, that there's also factors around the network building out, in that even in terms of Black founders being able to raise money versus non-Black founders, particularly in an American landscape. I think there's probably a similar scenario that's happening in this case, but you're seeing that the network is between female founders and private equity firms and venture firms is growing and expanding. So I believe that there's a strong part of it that's related to a timing issue, because we definitely are seeing a lot of those now. So I think female entrepreneurs will go through similar programs around learning how to scale, learning how to implement administrative elements. And there's in some instances where some research would indicate that some female founders are actually better at handling certain administrative issues compared to men, and that sort of a thing. So yeah, so in our view, there's a strong element of it that meant that went to last year. There's also the fact that our communication was marred by the fact that it was during the time of the riots, whereas this time around, it's not the case. So there's also that element that we're also taking into account. So yeah, I'd say those are probably the main things from our side that we discovered.
Okay. All right. No, thank you. So I think for the last 15 minutes, what we're going to do is to encourage everybody to join in the conversation. So we're going to take it into Q&A. I know that we've been answering questions in the chat, but I think with Oren, we should be able to unmute people as they talk, perhaps, and chat question.
My hand up, but it wasn't necessary.
Do you have anybody in the group that
ask a question, but to answer a question? There's a question in the chat group. Just reaffirm that we in the chat group was that if they unpack their business idea.
Zakile, Job, can I just quickly feedback on that? Okay, so
Yes.
so from Rentosa's perspective, I think, you know, we are a very asset hungry business, right? So we own all of the assets and we allow people to subscribe to them, right? So we bootstrapped the business for 2 years or so, and we went and found funding from family and friends and whoever we could, right? And I think we exhausted all of our avenues. And I think we got to a point where we realized there's two things, right? Is that, you know, you can have the money and you can get this going and you can continue going in that same direction. Or you find a partner that has the money and network and has a different perspective on things, right? And views your business in the same way that you do. And they've got a vision that sort of aligns with your business. And then you're like, okay, cool. Now we can go and find money from anywhere, but actually we're going to part with this because we believe that, you know, if we find the right partner that can fund us and has the same vision, this business grows exponentially. And I think that's, you know, the main reason for us parting with our shares in our business. I mean, I would rather have 50% of a business that is growing exponentially every year than a business that is worth a very minimal amount that we own as 4 guys, you know what I mean? And you're continuing on the same trajectory. You need someone to give you that sort of perspective and experience in this space that allows you to grow and get to the vision that you really need, and often take it further than that, right? Because you can only see so much. And yes, as entrepreneurs, we've got these wild and crazy ideas sometimes. When you find someone that believes in what you're doing, it often opens up new avenues for you. And I think that the value that can add to your business is much more than sort of the letting go of some of the shares within your business.
Okay, thank you. Zakeni, you want to take that question as well?
Yeah, I think I would completely agree on that. I think the misconception that somehow entrepreneurs don't want to give out their shares, you know, I think it's something that gets perpetuated, but, you know, from my experience, it hasn't been the reality. I think we are definitely, I think as entrepreneurs, in terms of what we've built, it's a very personal relationship there and a very personal mission. And so what we're usually looking for is the right partner. So it's not so much about, you know, letting go of the shares, but it's about understanding that will this person, you know, given the complexities and you know, the limitations that come with bringing in an investor such as that at whatever rate, it's going to come, it means giving away power. It means that you are now able to step back and allow someone to essentially help you to craft and build that organization. And so there's an element of trust there that has to exist. And I think for most entrepreneurs, you know, we rely on our instincts. Yes, you do your due diligence, but also the people you're engaging with. That's usually the key to either help put you at ease in terms of how they're engaging with you and what they've done in the past and what is their MO. So it can either put you at ease or it can, you know, make you be more, try to protect yourself and sort of close in. And that's when the negotiation process gets a bit messy because the alignment in values is very different for those two people trying to essentially get into a marriage. And so it's not so much about the shares. I think it's more about understanding and trusting and building that relationship that allows then for both parties to be happy with the contribution that each one brings to the table. But I also think it's more than about, you know, money. It's about, I think, as Thato alluded earlier, that as an entrepreneur, I think as you build, you realize that money comes and goes. What you need is substance. And so, you know, there's been a lot of conversations where I've asked this, where there's money on the table. When I ask these questions about, okay, access to markets, how do we work with you? What is the relationship going to look like in terms of helping us build capacity? And it's always come across as if we're entitled. And so, you know, and those are the words that have actually been said, that, okay, because we are asking for these things and this is an expectation for a partner we bring in, we're somehow entitled. And one thing I think we don't want as an investor, as entrepreneurs, is a dead weight investor who's gonna contribute once and then just sit there and allow you to basically sweat and die all on your own. I think you need a partner who will build with you. And unfortunately, that's hard to find. And so entrepreneurs go from pillar to post trying to find that right alignment and that right organization. And then I guess what gets out there is that they're not willing to give out their shares, but I think it's just about relationships, essentially.
Okay, no, all right, no, noted. I'll make sure that I remind those guys to be willing to be open. And there's a question I'm going to ask. There was somebody with their hands up, Zanele.
Yeah.
Zanele, do you want to go ahead and ask your question now?
Everyone, my name is Zanele. I'm from Welo Health. We're solving the problem of access to health using technology. So mine is a comment. Since MIC is sort of an investment wing from for the mining community or for the union, what is your program or what are your intentions in involving entrepreneurs in the mining communities in this and roping them in? I was born in Rustenburg, but I'm in Joburg. I have access, but I'm thinking about entrepreneurs who are based in Mabiskral, in Northam, in Mokgalakwane, who are in those mining communities, female entrepreneurs, male entrepreneurs, Black entrepreneurs like myself, who don't have access. And I'm glad that you have partnerships like your Grindstone. So how do you measure that? And we bring them in, we bring our brothers and sisters who are in the mining communities, who know nothing about tech, but they're very innovative, they're entrepreneurial, they just need a space in, and they don't have the kind of access that we have, who are sitting in the cities, and they don't even know that MIC exists. So how do we bring them in the table and open those opportunities to them? Thank you.
Sure. Do you want me to take that?
Yeah, sure. Take it.
Yeah, so we actually have, I think two things. One of the beneficiaries of our shareholder, the Mine Workers Investment Trust, is an entity called MDA. It's short for Mine Workers Development Agency. And MDA does a lot of activation programs in the very communities that you spoke to. So we already have existing programs that we run in mining communities. This initiative is aimed at helping innovative businesses get the growth equity they need to expand their operations, give them risk capital, which ordinarily they wouldn't be in a position to gain access to. If the question is, can we piggyback off MDA's programs to raise awareness around Khulisani? Naturally, we can. But the idea here is to find businesses that require growth capital so that we can put that growth capital behind them. The activities of MDA serve a very different need, and those naturally can get amplified, but to amplify that, we require MIC in general to be a lot more successful. The more funds we are in a position to distribute to our shareholder, the more they can amplify the activities of the likes of an MDA. And if Khulisani is a success, then naturally MDA's programs will equally be a success.
All right. I hope that your question has been answered there, Zanele. I think we can spare one last question if anybody wants to just go for it, grab it and ask your last question, and then I will do the final, conclusions. Going once, going twice, and gone. Okay. So I think, thank you guys for attending. We have come to the end of our session. I have typed inside of the chat box the website to Khulisani Ventures if you want to start your application. It is https://khulisani.mic.co.za. All right. So there's absolutely nothing to lose. Put in the application. You know what they say about the lottery. You definitely can never win the lottery if you do not buy a ticket. But if you buy a ticket, doesn't mean you'll win it. But you definitely have to put your hat in there and see how it turns out, right? And we will make the slides available to everyone. So I'll get a copy from the MIC team, and then I will distribute through our channels. Perhaps I will send to the mailer. And also remember, we've got our WhatsApp group. Don't forget to, if you want to get included in that, to speak to me after the session. And yeah, thank you guys for coming. I think this was a great event. And thank you again to the MIC team for availing your time and making yourself available to come chat to us about your fund. I think you're doing an amazing thing in the South African ecosystem. And I hope that this year we're going to see a lot of great companies coming through. Thank you to Khaole and Rentoza, Zakeni, and Mishan for making the time. I know you're very busy people. And thank you for making yourself available to come talk to us and help encourage us and some of the other entrepreneurs looking to go into venture funding. And thank you guys to the ABC Club, the Exco, the members, the guys that are busy making the chat happen. Thank you for making yourself available as well and participating and making this a great event. And we'll see you at our next one.
And thank you, Bertha, for arranging and facilitating this. Much appreciated.
Of course. Yeah, you're more than welcome. Yes. Thank you, guys. And we'll see you next time.
Thanks, everybody. Bye.
Thank you.
Thank you. Cheers.